Welcome back. I'm Andy Green with Green Group Real Estate at Keller Williams Realty Professionals, and I am joined, as always, by the one, the only, I know you missed this, Annie Ransom.
I do. I miss it so much. Hello, everyone.
Good. Annie's with All Pacific Mortgage. She's a trusted partner of ours on the mortgage side, and we're excited to be here on another Monday at 12:30. As always, our goal is to provide you with information and news that you can use to make smart choices, both right now and as we continue to move through COVID. And that's really what we're going to be talking about today, right, Annie?
That's right.
We're going to be talking about where is the real estate market, because we're in the real estate industry. Annie, tell everybody a little bit about what you do.
Yeah, so I own and operate a mortgage company in the city of Tualatin. Been in the industry for almost 16 years now. And our job is to make you protected with one of the biggest investments in your life. And there's a lot going on these days, especially with COVID, on how to leverage these low interest rates, how to leverage real estate in order to lock in your cost of living and help your future.
It is a crazy time in our worlds, in the history of the United States of America and the world, right? We've never been through anything like this. So having a trusted professional that you can lean on and ask questions and bounce ideas off of and just really dive into what is happening today and in order to do exactly what you said, which is protect themselves, right? And accomplish their goals. So
Right.
That's what we're going to be doing today. We're going to be talking about the real estate market, where exactly we're at, and a couple of reports came out recently, and that's what we're going to look at real quick. So let me share my screen here. And we're off. So let's talk about this. The three of the latest reports showing housing market is strong. Do you agree with the headline first and foremost, Annie?
I do.
Tell me why.
Well, there's a lot of competition. Lots of folks are in a position to where, luckily, they can still move forward and buy. Supply and demand are what drive this market, and throw in really crazy low interest rates to boot. It's a perfect recipe for a nice, strong marketplace.
Agreed. I couldn't agree with that more. And you mentioned supply and demand, and we're going to talk about that here in a little bit. But the supply, as we've been talking about each week, is really, really low. It actually dropped almost a whole point over the previous month. And I think that's the biggest theme that is affecting people in today's market. So we'll talk about that more here in a little bit, but let's get into a couple of these reports that came out and see what they're talking about as far as the real estate market being strong. So number one, Ivy Zelman Real Estate Broker Survey. So this survey explains the purchaser demand remains strong. This month's overall homebuyer demand rating was easily the strongest sequential gain in our survey history. Strength continues to be led by the entry level, while high-end demand is less robust in an absolute sense. I love that they threw that in. It's in an absolute sense. There has also been relative improvement, with contacts attributing incremental improvement to the stock market's rebound, record low mortgage rates, which Annie just talked about, and luxury customers trading out of high price cities. And I believe that Portland is poised to take advantage of a lot of those higher price cities like Seattle, San Francisco, where the price per square foot is double.
Right.
It's double what we are in Portland. So I know I hear this, and I'm sure you do, Annie. It's hard to get away from, but people are talking about how Portland is overpriced, and it's such an expensive market. When you compare it to all of the others on the West Coast, we're the least expensive.
Right.
Do you hear that as well?
Oh, all the time. Yeah. It depends on where people are coming from, obviously. But, and again, supply and demand, it's expensive because there's not a whole lot of supply here.
Yeah. And I'm not going to say there never has been, but we have this thing called the urban growth boundary.
Right.
And basically you have like the city, and then you have this bubble that is drawn around the city, and developers can't develop outside of that. And so it really controls the growth and like keeps a really stable environment for house appreciation and pricing in the Metro Portland market, right?
Right.
Yep. Okay, so that was number one. I have no idea who Ivy Zellman is, but real estate broker survey that they do. So there's number one. Number two, the National Association of Home Builders. I do know who they are, and I've been active and involved with them for just about 20 years. So let's look at and see what the National Association of Home Builders is, which it's a big association, and they have some really good smart economists that are paying attention to what's happening with the housing market because it's such a big segment of our economy. So let's see what they have to say. In a strong signal that the housing market is ready to lead a post-COVID economic recovery, builder confidence in the market for newly built single-family homes jumped 14 points to 72 in July. According to the latest National Association of Home Builders, Wells Fargo Housing Market Index, the HMI now stands at the solid pre-pandemic reading in March before the outbreak affected much of the nation. What'd you hear in there, Annie?
Oh gosh, a lot.
Okay.
Yeah. So housing is. Let's see. I'm gonna review through. I mean, basically, what it means is that this pandemic, through at least for real estate, is we're just kind of rolling straight through.
Yeah. There was definitely a blip, right?
Yeah.
Or blip. What rhymes with blip? Dip. So there was a dip because if you look at graphs on home sales, I mean, it dropped dramatically, but it also, what it's shown is that it's increased just as dramatically as it decreased. Right.
If not more.
Yeah, exactly. So what this said is that we're basically at pre-pandemic levels. I mean, that's what I got out of it. So are we fully recovered? Absolutely not. Do we have a long ways to go and things to figure out and, people's health to focus on in the here and now? Yes. And things are improving.
Yeah.
Things are improving, right?
Right. Yeah. It'll be really interesting to see what happens as we head into flu and cold season.
Yeah.
And when our markets traditionally, this is really usually the busy season. Kids are out of school. People are looking to buy and sell, to not disrupt them. But it will be really interesting to see if we can continue riding this wave for sure.
Yeah. Well, you just mentioned something that like this is peak season. This is when we typically get very busy. From your perspective, like you've been in this business a long time. How does this compare, like this time of the year compare to either last year or just what's normal for you?
Oh gosh. Well, this year was really strange. There was a lot of competition last year of people looking to get into the market, and there just wasn't enough inventory. And so January and February this year were, abnormal. There was a lot of activity. And then rolling straight into March, this pandemic hits and rates reduce. So, 25% of Americans, can take advantage of these low interest rates. That's a lot of loan volume. So this year alone has been a phenomenally busy year in comparison to, last year or years previous.
Have you ever been this busy?
It was pretty busy in 2009 when we saw interest rates. They were mid 3%. Mm-hmm. Nothing like this. No.
Okay. So 2009, when interest rates hit 3.5%, that's like a distant second place.
Yes. Yeah. Okay. I think our economy, it goes to show that our economy this time around is just, it's in a different place and it's being affected. Yeah. And it's being affected differently. What we saw from 2006 to 2010, that we were in a true housing crisis.
Yep.
You know, people owed more on their properties than what they were worth. So if you lost your job or you got laid off, like we're experiencing right now, you couldn't make the decision to sell your home and take that equity because your home was worth more. You know, you owed more than it was worth.
Yeah.
We just aren't in that position right now. You know, people have good equity in their homes. There are a lot of industries that have been affected by COVID, particularly if you're in the entertainment industry, you know, food, beverage,
Hotels,
hotels, theaters.
airlines.
You know, if you're in the business where you're selling game tickets, you know, a lot of those industries are the ones that have primarily been affected. But, you know, technology, the auto industry is booming right now. You know, there's like all of these other places that are really going to be able to support this. But if you're a homeowner, you've lost your job, and you anticipate you're going to continue being affected by COVID, that's the point. It's an asset, right? You have the ability to sell your asset or draw from your asset in order to help you weather the storm.
Yep.
And if you were to talk to a financial advisor, that's how they position an overall financial plan. You diversify your money to pick up where one thing is suffering, right? And real estate right now is thriving. Your stock portfolio isn't doing so hot, or your retirement isn't doing so hot. And so the two of those leverage in order to get you through these hard times. So I think because people are in a much different position, it doesn't mean they're in a great position. It's just different. It's much different than 2006 to 2010. And because of that, we are seeing a lot more volume because people are in a position to where they can leverage that money, leverage that asset, or be able to take advantage of purchasing real estate. So we're seeing an influx of purchases and refinances right now. Lots of people right now, like it's a perfect storm for somebody to downsize. And that's at a really great advantage too for folks that need to sell a property and get into that, you know, that next home. So it's been wild.
Agreed. It has, and looking back at the past, you mentioned the equity position for most Americans. I remember back in 2011, 25% of my business approximately was short sales.
Mm-hmm.
So, like, are we going to see that again? Very unlikely. Are we going to see some short sales? Yes, I believe that will be a segment of the housing market that we haven't seen in a long time because you know, some people don't have as much equity. You know, right. It's just the reality. Okay, so let's look in and talk about number 3. So the Realtor.com Housing Market Recovery Index, it leverages a weighted average of 4 key components being housing demand, home price, housing supply, and pace of sales. So what do they say? That the U.S. housing market has recovered from the immediate disruption caused by the COVID pandemic and returned to January 2020 growth levels. So again, I think that's just kind of reiterating what we were just talking about, which is we're kind of back to the baseline of where we were at previously, because the trajectory of where we were at, like we were on pace for a really solid year, and obviously that came to a halt. It stopped for a couple weeks, and then every 30-day period since then has gotten better. Agreed?
Right. Yeah, absolutely.
Yep.
Yeah.
So let's sum this portion of the conversation up. What would you say to somebody that's thinking about either buying or selling a home in today's market? What's your best advice for them?
Oh my gosh. Well, so you and I think we agree on this, right? It has to be the right fit for the individual, but assuming that they say all things considered, I'm ready to go. Buying, if you're considering buying, I say this almost every week, I feel like it's really important to lock in your cost of living. So it's always a great time to consider buying if it meets your individual needs. And including that piece of locking in that cost of living, I think is really important. And the reason that I say that is that right now in the state of Oregon, we get to write off our taxes, our interest, and homes are appreciating. Those are all really great perks of purchasing real estate, but they're not a guarantee, right? We had a tax reform that affected how we could file taxes, what our write-off eligibility was, a few years ago. We've seen in the, nationally, property values stabilizing or flatlining or even declining, especially during the housing crisis. Luckily, that's not happening right now. And the anticipation is that won't happen right now, that housing should stay relatively safe and appreciate during this recession. But that cost of living piece is the most important thing. And that is a steady. And so for those folks that think, oh, maybe I'll hold off, or I don't know whether this is the right time, we show them, look at how much you're spending on rent versus what your net gain would be by investing in real estate. Yeah. So I think it's always a great time to consider that. For somebody who is looking to sell and buy, I suppose we look at metrics a little bit differently, but we look at what's that move up buy going to do for you. And most often when there is some equity built up, using that equity to get into a larger asset for relatively the same price, in some cases for a little bit less than what somebody's paying right now if they have a higher interest rate, your net gain is so much more than staying in that existing property. So it all depends. But
yeah. So you mentioned rents a minute ago, and I'm going to be honest, I don't pay a ton of attention to the rental market because I don't have a property management company. We help people buy and we help people sell real estate, but I do pay attention. And what I've seen with rentals is it seems like the pricing is really, really going up over the past 3 to 6 months. Have you been hearing that from your borrowers?
I have. I mean, in the Portland area, it's tough because we have such strict rental laws, but it all has to do because a lot of people are getting out of those leases if they can't afford them. And those landlords are increasing those rents, the appropriate amount that they can, because there is so much demand for housing right now.
Right. Yeah. I've really watched that increase dramatically. And when you compare rents and the amount that people are paying for rent right now, and you compare it to you talking about locking in your cost of living, at the nearest we've been to zero, I think, ever.
Oh yeah, without a doubt. Without a doubt.
So what are interest rates today?
Yeah, so the market did tick up just a little bit from last week. So interest rates are sitting right around 3% for a 30-year fixed, 2.5 for a 15-year loan, which is just insane.
I love it.
I mean, absolutely insane. So that's about the national average. There's just doom and gloom in the economy right now. Until a vaccine comes around, I think we're going to see things stay pretty stable at these levels. And so unless, God forbid, something more catastrophic happens, I know we're in a presidential election, we're headed into that season. We've got this major pandemic going. We've got all of these really big things nationally and globally to look at. So it's really going to take a huge turnaround for us to see rates begin to go the other direction. But I think that they're probably just about as low as we will see them go. Banks just can't really afford to sustain at these lower levels for long. Right. So, the 0%, I don't know what article people have seen. They think that rates are going to go to 0%, but it just isn't a possibility. So take advantage while you can.
Yeah. So you mentioned something a second ago that I thought was a little bit funny, which is you said if something even more catastrophic happens, well, depending on your political affiliation, how the election turns out,
right?
Some people might call that catastrophic.
True. Yeah. I mean, we will see a disruption in the markets for sure. The markets were very emotional but not enough to, I mean, when I'm talking about catastrophic, which I 100% agree with you, but what I'm referring to would be like, these hurricanes, right? Now we're talking about it's hurricane season in a lot of places, and those all place a strain, even though they may not affect us here in Oregon. It still places a strain on our national economy, and that plays into it. A major earthquake, a 9/11, all of these things that really affect our financial industries. It's not going to take much at this point. Like COVID is taking everything that we have and lots of resources in order to sustain through all of this. So we'll see what happens, knock on wood. I hope that this is as bad as it gets and that we can, while I live in this interest rate world, and of course real estate, but, we always tell people doom and gloom in the economy is great for mortgage rates. So it's not going to help your stock portfolios and your retirement. But of course, I love giving great interest rates to my clients. So I certainly don't want anything bad to happen to anybody. I don't want anything bad to happen to our economy. It is great for my clients and our clients to be able to take advantage of this. But I am looking forward to, things recovering on the other end, because I know that we all need that. And let's face it, over the last couple of years, interest rates in a mid 4%. Is phenomenal too. So, even honestly at 5.5%, it sure beats, the first interest rate that Andy said that he had.
7.25.
Yeah. Right. And I'm sure at older generations, my parents talk about a 15, 18% interest rate. Granted, houses were $50,000. But again, that all plays a role in securing in that cost of living. So it's an ebb and flow, and it's a give and take. And we certainly are taking as much as we can right now while rates are low. But I think that myself and a lot of people will be relieved when we start to see some stabilization, which is good.
Yeah. Let's pivot a little bit. Let's talk about the real estate market. I'm not going to go into real in depth, but I earlier I mentioned the biggest challenge that we're facing right now as real estate agents working with clients who are looking to buy and sell real estate is inventory levels. Inventory levels are at, I think it's either 1.3 or 1.4 months of supply, and that's down almost a whole month from the previous month. So that would be in May. And there is a shortage of listings, and that is the bottom line. You've been talking for the past 22 minutes about interest rates being low and supply and demand and all of these other factors. And the reality is there is very high demand and very low supply. So that's definitely helping our appreciation rates in the local Metro Portland market, but it's also posing some real challenges for home buyers, particularly.
Right.
We're seeing multiple offers in a lot of the cases. Let's call it 50 to 60% of the time we're seeing multiple offers. And that doesn't mean there aren't hidden gems out in the market. We just negotiated an offer a couple days ago where we got a significant reduction in the price. We got some great concessions and feel like, it was a good value in today's market. So just because there are very few homes on the market doesn't mean that there's not the right home for you, because that right home is different for everybody. This home happened to have been on the market for, I think, a couple weeks. So there are opportunities as well as the challenges that we're facing today. And we're putting homes under contract on almost a daily and weekly basis. So we're helping home buyers accomplish their goals. We don't have enough home sellers in the market, and that's where we come in. We can help you solve your problem. So if you're in the camp that you would like to move, but you just have a lot of uncertainties and you're wondering, how are people staying safe? How are people viewing homes? How are we writing offers? How are we going to closings? And all of that stuff. That's ultimately what Annie and I are here for. We're here to answer your questions, give you information, to make smart, educated decisions on what is best for you. And that is solely our job up front, is to just provide you with the information to make a smart choice for you, because we can't make the choice for our clients. Right, Annie?
Right. Yeah.
Right.
Give you the tools to make educated decisions.
That is absolutely right. So, so that's a glimpse at where the housing market's at today, where some of the smartest minds in the housing industry, where they think that we are today, and where we're heading. So to wrap it all up, I feel like we're in a really good place. Our market is healthy, it's stable, it's increasing, it's getting better every month, and I am feeling really good about this year.
I
Annie,
love
how
it.
about you?
Hey, I feel, I can't believe that it's going to be August in a couple of days. Like,
Seriously, I'm taking my last summer vacation in like a week.
Yeah.
And so for me, that's basically telling me summer's over.
Right. Yeah, I leave next week for a week, so I won't be with you guys next week, but
I won't either. So we are not going to have a show next week because we do it live, and I'm going to be on a lake in Idaho, taking my kids boating and fishing and jet skiing and tubing and all of that. So
I love it. Well, I'll be on a lake too, not your lake, but a different one, doing all of those same things. So I hope you have a great time.
I love it. I love it. Okay, Annie, it was great having you join me again today on this Happy Monday. It's such a great way to start our week every week. If you out there, you watchers, you listeners, if you have any questions, you pretty much anywhere that you're going to see this, you're going to find contact information for us. So use us. Don't abuse us. Use us as a resource. We are here for you, and we would love to be of help. So, Annie, until next week,
2 weeks.
we are out of here.
From today.